want to check in on some interesting updates we've been getting in the crypto world. Of course, we've been seeing the recovery play out as the broader market recovers as well here today. And scrutiny potentially when it comes to tax reporting here and a push in the Biden administration to go after some of the reporting when it comes to users potentially there on Coinbase and really trying to flex. This is something that we've seen stress over the last few weeks here when it comes to taxes. A good reminder here as well. For more on that, I want to bring on Yahoo Finance's Jared Blikre here. And Jared, we were just discussing this because Coinbase obviously has been in this battle before a few years ago, even when the IRS was kind of looking into users maybe not paying taxes and winning in getting some of those records. But obviously a touchy subject out there anytime you talk crypto.
Yeah, this is really fascinating. I don't have all of the details here, but I'll give you my best shot. So if you transfer $10,000 worth of crypto under this new proposal, it would be reportable to the IRS. Now, this is very similar to an existing rule, Bank Secrecy Act rule, where if you do a transaction in cash for more than $10,000, it is reportable automatically by the bank. And I'll just show you what happened with Bitcoin when it reacted to this news. This is a 5-day chart. Let's bring this down to an intraday. That right there, that kind of killed the rally that we had. We'd gotten all the way back to 42,500. That was yesterday's highs after the crash. You can't see it here, but on an intraday, intra-minute basis, we did get back up to those levels. Now, I was going over some of the history with Coinbase and reporting. Now, currently, they do file Form 1099-MISC with the IRS if somebody has made more than $600 from crypto transaction. That's already done. In the past, and this is what they fought, they were reporting anybody who had made more than 200 transactions that equaled or was greater to 20,000 in value. They discontinued that, but this is no small thing here. The governments across the world are concerned about competition in forms of currency. We saw this with respect to China. I agree with you, Zach. I don't think, and Akiko, by the way, who's not here, by the way, but I think the China news was already kind of baked in. People should have known that was coming, but these digital assets, they are competition for these fiat currencies, and so we need to keep that in mind. With respect to what's happening in the technicals here, you can see another sea of red today for crypto.
Yeah, to me too, Jared. I mean, I guess it gets back to the idea of the fear index, right? When we talk about extreme fear right now in the crypto markets, you see kind of these jitters around headlines that might be capitalizing on some of that fear. When we think about, what happened in China, regulations there already discussed, and then now you're kind of talking about tax reporting rules around here that the Treasury is trying to propose that we've already kind of seen before. And on top of that, in DeFi, the way that we've seen that shift over, it's very difficult to stop some of these. When you're talking about a decentralized exchange that's not following normal traditional know your customer rules, KYC rules, that Coinbase and some of these other centralized exchanges have to follow because the technology's already kind of gone in that direction and they're decentralized entities. The same reason why even if you really wanted to shut down Bitcoin, it'd be rather difficult to do so. So we are kind of approaching one of those interesting areas where we're getting further along in DeFi to the point where even if they did want to implement some of these rules, you could have a lot of people just operating on platforms that don't abide by them.
Yeah, and I'll tell you a story. This goes back 20 years. You mentioned know your customer rules. That has to do with money laundering, anti-money laundering. This all came about after 9/11. I was in Miami. I helped form offshore hedge funds at the time. Everything was by the book. But when that law came into effect, and that was right around the times of Sarbanes-Oxley as well, when all these laws came into effect, immediately, banks began cracking down all over the world. There was a lot of illegal activity going in there. And so you would have countries like, the Bahamas, Dominica, Aruba. You would have thousands of correspondent banks, and then that kind of shrunk to zero overnight. So when governments decide to get behind something and do something, they can really drastically alter the landscape here. And so this might just be the tip of the iceberg. I don't think crypto's not going away. DeFi is not going away, but it can be heavily, heavily influenced.
Suddenly, I'm way less interested in these crypto headlines, Jared, and more in your Miami past. We're going to have to dig into that later on here. Now I know where the tan's from. Jared Blikre, appreciate you hopping on here to chat that with me today. Akiko's out.